Hello, traders. You're welcome. Today we'll be talking about liquidity, and I want you to give me your time and your attention because I will be explaining liquidity in the simplest term. You understand liquidity like never before. Just give me your attention, okay? Now, at the end of this class, you understand what is liquidity, how to identify liquidity, how to avoid liquidity, and how to use liquidity for your advantage. Now, what is liquidity? In simple terms, I will say liquidity are areas where orders are placed. Yes, areas where orders are resting, where these pending orders are resting. These areas are known as liquidity. And money moves the market. So your money, my money are the liquidity. So areas where money are, those are what? Liquidity. And what market does is that market is going to the area where money are, clear those area, and then most time continue in its direction. You understand? That's what market does. And for example, I love phone and you understand. So if I have phones, but I don't like selling my phone. Yeah, I don't like selling my phone. If I have phones, maybe I want to sell the phone. I have two phones. And I have somebody calling for my attention in a lower price, and I think if I go to this higher price, that's where I'll get my money. What do you think I'll do? I'll have to go to those guys who are bidding for higher price, collect their money, and then come back home. You understand? That's how liquidity work. Liquidity, the market moves to area where there is money, grab the money, and then continue to eat direction. That's how liquidity works. Now, what are the types of liquidity? We have the sideway liquidity, we have the trending liquidity, and we have areas where to supply or demand are closed. Those areas are also liquidity because market will use one of those supply or one of those demand for liquidity. That's how it works, yes. Okay. And now let's how to identify them. Let's do our diagram first, then before we go to the chart. Okay. This is it. Those are trade support and resistance. This at work. These are our support level. You know, these are our support, our resistance zone. When market move to the upside, you you sell. Then when market move down. So these are our support and these are our resistance. Let's level it. Support, S for support, then R for resistance. So these are our resistance level and these are support level, right? Yes. So the market move from this support down to this level, you are to what? You are to, when it gets to this resistance, you are to what? Sell down, right? Yes. Then when it gets to here, you are to what? Buy from here. So liquidity states that area where two where you have equal highs, two equal highs or two equal low is already what? Liquidity. Anywhere you find two equal highs or equal low, those area are liquidity because this is what market will do. Now we now have two equal low here, right? Yes. And two equal high here, right? Yes. Now what market does, or what if you want to trade, you'll be like, okay, if market move to this place, now market will respect this support level to the upside. Yes, yes, okay. Now, this place, there are a lot of traders who have placed their pending order here. Those who are waiting to buy from this place, they put their pending order, or those who are waiting for market to break, those who trade market break of structure, they're waiting for market to break this structure, retest, and then continue on to the downside. So what the market will do, this is what market. Let's just do the example of it. So these are traders who are waiting, the ones who are waiting to what? To buy from here to the upside. and then continue to the upside. They will have another trader who are waiting for market to what? To just break the structure and retest. You understand? And then continue to the downside. So these are the traders. We have two sets of traders in the market, and the whole orders are placed within here because these two equal low are giving you what? Area of clear support level, right? Yes, and these two equal are giving area of clear resistance level, right? Yes, okay, see. Then those who wants to buy from this area will put their stop loss around there, which is below the a bit below the support level. Yes, right. Yes, okay. SL, the SL. This is the SL, and those who wants to those who want to those who are waiting for the break of structure and the retest, and then they said they'll put their stop loss within here, right? Yes, so this is it. Now this is what they will do. Let me put it at the middle so I see clearly. So this is what market will do. Market already know because this area now there are a lot of orders sitting here, a lot of pending order. These are areas where money is. This whole area. So this is what market will do. Market will tap on it, push down to this area. What market will do? Market will first of all clear those. Most of the time market will come and clear those who are waiting to buy from this place, clear their stop loss. Where is their stop loss? This is their stop loss, right? Yes, market will clear the stop loss, move to this area. And if market want to mess up with everybody, then market will later what? Move to east direction to clear those people who are waiting for break and retest to sell to the downside. What market will do? Market will come because they've already placed their stop loss here. They are already in the market. What market will do? Market will what? Take them out again and continue what? To the upside. That's how liquidity works. That's how liquidity works. So you see, but most of the time, what market will do most of the time. This is what market will do most of the time. Market will just Market will come, tap only those who are waiting to buy from this area. Market will just clear them out and retest and then continue to the dance. And that's what market will do. You understand? So, but some of the time, market do respect this support level and then push to the upside. And now again, that goes to those who are this place now becomes our new what? Let me claim this shit. So here now becomes our resistance level, right? Yes. So for those who are waiting to who are waiting to sell from this resistance level, this is what they are expecting. This is what they want market to do. They want market to push down, push down to this way, tap on this support level, and then come back to this resistance level. So that they will buy, right? So that they will sell back to this level. Why some are just waiting for market to push down to break this resistance level, break, retest, and then boom. Then this is what market will do. Now, those who are waiting to sell from this level, their stop loss is here. This is their stop loss. And those who are waiting for market to break, those who are waiting for the market to break of structure, then retest, their stop loss will be here. This is where their stop loss will be. Their stop loss will be here. So this is stop loss. Now, this is what market will do. You've already know, we've done the example before. Market will just push to this side. Those who place their stop loss here, clear them out, and then boom, continue to the downside. Now, those who also place their stop loss here, who wanted to buy this break of market structure, the retest. Market has broken the structure. This is break of market structure, retest, and then waiting to buy to the upside. Market will what? And their stop loss is below here. Market will clear them out to and move to its original direction. You see, that's how market works most of the time. Just to come, market will come to this area because there are a lot of pending order here. Just take all the money that have been placed here and then continue to eat direction. That's that for the uh sideway liquidity. Just know that anywhere you see equal highs or equal low, because this two now, this and this makes it what? Equal high, equal high. You see, anywhere you see two equal high, these two, that tells you that that place it has automatically becomes what? Liquidity. Market might just come take those liquidity and then do whatever it wants to do. And this equal low, anywhere you see equal low, know that that place what is now what? Liquidity. Now let's do that of sideway. Sideway. This is it. When market is trending to the upside. When market is trending to the upside. So we have two equal low here. Yes, and two equal high here. Those who are buying, those who trade trend line bounce. So when we come to this trend line, they want to what the next ones wants to do now is to what? When market the upside, which is to create what? To bounce on this trend line. They want to sell down, and when market comes to this place, they want to what? Buy. So this is what market will do to those people. This is it. Now we've already established that if market anywhere you have two touch, that this two touch, you should know that place is a valid zone, right? Yes. So but liquidity mostly come for those guys. Liquidity come for them. So this is it. So now we are waiting for this third touch so that we'll buy from here, right? Yes. So that we'll sell from here, right? Yes. Okay. Now market is pushing to the upside just to do that third touch, and then we'll sell. Yeah, so these are the first set. Those who want to wait for me market to sell and then boom for them to sell, or those who are waiting for what? Break of trend line, when market will break trend line, retest of trend line, and then continue to the top side. So these are the two types of trade that we get, and these are all these places they are pending orders. So those who are waiting for market to respect this high, those who are waiting for market to respect this trend line, just want to take the trend line bounce, they will put their stop loss here. This is where they put their stop loss. Their stop loss should be, yeah. So then those who are waiting for trend line break and retest, they'll put their stop loss below this place. This is where they'll put their stop loss. You get it? Yes. Now, what market will do? Liquidity will just come. Now, market is pushing to the upside. Liquidity will come, sweep them, and then continue on to the downside to sweep everybody, this stop loss and this stop loss together. That's how liquidity works. The same thing for those who trade those the same thing for this one as well. When you want to sell down to the downside, same thing. That's how it works. Liquidity comes from for everybody. So you have to do this yourself. With this example we've done here, do the same thing here. So this one, those who wants to buy from this resistance level, because this becomes our resistance, and this becomes our support for trend line. So those who want to buy from this support level, you understand, market will just come sweep them because this area there are a lot of orders being placed here. There are a lot of orders being placed here, a lot of pending orders. So those who wants to buy for the trend line bounce, their order will be there. And those who are waiting for trend line break and retest, their order also will be resting here. What market will do, we clear them all out. So now you should do this example yourself. Do this one yourself. Now let's do that of when market creates what when two supply zone are closed. Let's do that. When two supply or two demand zone are closed. This is it. If market is pushing to the upside, do something like this and create what fresh supply zone here. Create supply zone here and push to this side to break structure. To break structure, you're like, oh, market has broken structure. The market will pull back to create another fresh supply zone here and then push. Maybe sometimes break structure again. You're like, oh, yes, then pull down. What market does most of the time now, market is supposed to respect this supply zone here. Okay, let me mark out all the supply zone. So mark at this supply zone. We have two supply zones. You can see that these two supply zones are closed. You can see that they are closed. So we have one supply zone, another supply zone here. Let me label it supply. S for supply, right? Yes. So we have two supplies. And you can see that they are closed. Then what market will do, what will be waiting for market to do is market to come and what respect the supply zone. But most of the time, this is what market will do. Hit on it and what started pulling up. You like, yes, it's going to, I will show you this on the chart. It's going to, the market will come to create what double top again. So this is a sign to tell you that this has now become liquidity. So what you should do most of the time, if market push up and market did not break this side, it is better you hop out from that trade. Hop out from it because when market does something like this, what market is going to do is to take all this liquidity because there are a lot of order resting here already. You understand? Market is coming. What market will do? Boom, take this liquidity here because your stop loss will be here. Your stop loss will be here. Let me put your stop loss. So those who take this trade, their stop loss will be here. This is it. That's where the stop loss is. Stop loss SL. You are seeing? This is where the stop loss is. This is what market will do. Market will come, swipe them, take that stop loss out, and come back to this supply zone. Just tap on it and then boom. This is what market will do. Yeah, see, this is what market will do. Just study this, then let's do that of demand. I'll show you this on the chart. Don't worry, let's do that of demand. So this is it for demand zone. Market is pulling down, create this low, push up, and create what fresh what demand zone. They'll be like, okay, then push up, maybe fail to break, then come create another fresh demand zone, and then break. You'll be like, oh, market has broken structure. Then now you've marked out your demand zone. Oh, when market gets to this demand zone, I'm going to take this trade. Then you mark it out. Then you mark it out. Then this is what market will do. You be like, okay, this is it. Okay. Market will pull down back to this zone. You will be like, okay, market is holding. The market might do something like this, push up and this. Anywhere you already have two equal or no, that has automatically become a liquidity zone. That has automatically become liquidity zone. So be careful when trading within that zone. Then if market does something like this, then market, the next move did not break this high, please stay away from that market. Because when market is coming down, doing something like this, it will take, it's not the most, it's not, there's not 100%, but majority of the time it will sweep all this liquidity here, then come back to just tap on this demand zone and then boom, that's it. That's what market will do. So be careful when trading. So try to observe area of liquidity so that you won't be stripped by liquidity, so that the market won't use your orders as liquidity. So now that's the three types of liquidity we have. Now let's move to the chart where I'll show you all this liquidity and also how to avoid them, which we've already stated here, how to avoid them. We stated it here. So when market comes back to this area, your entry point, and fail to break structure, the market comes to this your entry point and fail to break structure and is now pulling down. So be careful in that kind of market. If Be careful, it is better you close in half profit because they said half bread is better than none. You understand? So that's it. Or market will use you as liquidity. Now let's go to the chart. Yes, this is the chart. Now what you can see here is our, this is our supply, our demand zone. This one, our demand zone, then this one's our demand zone, and this is our entry. You know, when market comes to your demand zone, what you take your entry. You get it, you take your entry. So now this demand zone is 1 hour demand zone. Let me show you. Let's go to 1 hour so I see it. Look at it, 1 hour demand zone. And this one is clear on 1 hour here, right? Yes. And this one is from M15. Let's go to M15. Let me show you. You can see it's clear on M15 demand zone. Yes, you can see multiple imbalance. So now we have two demands on here, right? Yes. So you can see this is our support. If you want to draw your support zone, this is a clear support zone on 15-minute time frame. So you'll be like, okay, market has created what, two touch. So this zone might likely hold. But see what market did. Market came or test on the zone, and then broke the zone. So these two becomes liquidity for the market. You get it. So market tap on it, push up, and then broke it finally. So let's clear that one. So this is it. Now this is our demand zone, right? Market has come tap us in already in this demand zone, and what, see what market is doing. Market is trying to move in our direction. See, let me take it this look candidate. You can see market is trying to move in our direction. Then all of a sudden, the market pull down because your SL will be below that demand zone, right? Yes. See, all of a sudden, the market pull down, try to enter this demand zone, but fail. Rather, it broke this one, and you see, market what did not create a higher high from here. What you should do, even from here, if you've entered this trade, you see the market tap you in, the market was supposed to create higher high to give you a clear heads up that this market is ready to move to the upside. But see what market did, came tap you in, failed to create higher high, rather create what, a lower low from this one. That is a sign, and you see how market is finding it difficult to break through this zone. That's a sign, and you've already established that there is a demand zone below. That's a sign that market will no longer respect this. Is coming to test on this to the upside, and see what market did. Immediately market tap on that supply zone, and then boom, you can see to the upside. So how I wish you waited for market to just come to the supply zone, tap you in, and boom, you've already hit TP. And you can see 1 to 3, it's even 1 ratio 4 already. So that's how patient is the key. Patient is key. Most of the time, be patient, then you market won't use you as liquidity. So we've established this, that of the demand zone. So I'm giving you the assignment to do that of the supply. zone to that of the supply zone. Then for those who trade support zone, so this is it. I've given you assignment, do that of the supply zone. You will see it on chat. Those who trade support, this is it. You can see this is our resistance zone, right? Yes, multiple touch. So that's to tell you that when market comes back to here to respect it, yes. Then this is our demand, our support zone. Sorry, this one above is our resistance zone, and this is our clear what support zone. So you can see multiple touch one, two, three. Market has given you multiple touch that yes, this zone will hold. Understand? Now see when market comes back to this zone, you see what market did? It did not respect the zone. See what market did here again. Market failed to create what higher height. You see, it pulled back down back to the zone and failed to create higher highs to break the zone. That's also a sign to tell you that if market is coming back, market won't expect it. Though, see what market did here. Oh, it creates equal high here. Okay, let's see. You remember we said anywhere there is equal high, those place serves as liquidity. Look inside the chart, you will see inside there. You can see two equal high here. So market create this high and they create this high. You see what market did? Clear this equal high, cleared it, market cleared it and pushed to the upside. See what market did? Market cleared this equal high, these two equal high. It cleared it and then pushed to the upside and then continued to the downside. You see what market did? So market just came to take all the liquidity that have been placed within this place. Market took them all and then push to the upside after taking the liquidity, then sold down. You see, so now what market did here, you see, push up. There's a lot of liquidity already. Some people are waiting. Oh, market is coming back to just tap on this support level, then boom to the upside. But you see what market did? Market cleared them all. Boom, cleared them all, and they favored those who are already selling, who saw the break of the structure, then retest and then sold down. You understand? So market favor them and then boom. See what market did sold down all to this way. So that's it. Let's establish that for the trend line. Those who trade trend line. Let's look for one. All right. Look at one. Look at one. Look at one. So those who trade trend line will be like, okay, we are buying from this place. You see, markets has created what equal high and gave us one that broke this high. You can see now that's a sign to tell you that market has broken what is structure here, right? Yes. Look at it. Market has created a high that break this structure. So this is now your BOS, which is you've seen a clear break of structure. Like I've seen a clear break of structure. Then what am I waiting for? Now you've seen a clear break of structure. This. Okay. Now see, this is your trend line. One touch, then two touch. You can see first touch, second touch. So you are waiting for the third touch because you've seen market broke what this market structure yet stay outside. See now, a lot of traders will be waiting for market to do the third touch and for them to buy. But see, market came down to here. Instead of market doing this third touch to this side and continue to the upside, instead of market doing this and then boom, see what market did, came break, cleared all the others that are here, and some who like let's buy from here, let's who have placed order to buy from this place. Some of you have placed order to buy from this place. Market is now pushing, let's buy from here, boom, market is what. So if you place your order to buy from here, if you place your order to buy from here, if you are buying from here, This is your entry level. So your stop loss will be here, right? Your stop loss will be here. Let's say here, below this place. This is where your stop loss is, right? Okay, you are buying from here. See, market plays with the two people intelligence. This is it. Market now pull up. Oh, yeah, in, buy, buy. Then you see market come, took you out. So took you out and then pushed to the outside. Trading is sweet. Trading is sweet. So now we've done it. I believe with this you've understand what liquidity is. So we've done the examples. We did the diagram. With the diagram, you'll be able to understand clearly. And we've also done the example on the chart. Okay, let's do one more example. Let's do one more example. Now let's establish how to use liquidity for your favor. You can see this example. You already know that anywhere there is double top or double bottom, equal top or equal bottom, those areas serves as liquidity. Then what you should do when you are to spot your entries, what you should do, just look for those areas where market has created. You can see multiple touch here. You can see how market has created multiple equal button here and double top here. So these are areas of liquidity. These are areas of liquidity. These are areas of liquidity. You can see equal top, which is equal high, then equal low. So these are area of liquidity. If market is coming down, a market will sweep all this area. Market will sweep all this area and look for what? A better place to test and then move to the upside. And those places, that's where you will understand. That's where supply and demand comes in. That's where supply and demand comes in. So on our next class, you understand supply and demand. So what you should do next is to look for the nearest demand zone below. So look for the nearest demand zone below this area of liquidity. For me, there's no demand zone here. There's no demand zone there. Though a lot of people will have to mark out this one as demand zone, but I won't because I want to see the opposite candle here. The opposite candle causing this drastic move. That's what I want to see. But a lot of people will take this as demand zone, but for me, there's no demand zone. So look for the demand zone below here. And so you should wait for the market to move to that demand zone below, plot at your demand zone. If you spot anyone here, plot it out and wait for market to what? To just pull down all the way. Wait for market to just pull down all the way to that your demand zone. Tap on it and then you continue to the upside. The same way with here, if you want to spot for sell entry, just look for any supply zone. You can see for me, there's no supply zone there. Market will take all this one as liquidity. So it will be advised you patiently wait for the nearest supply zone and that's it. So you have to wait for market to get to this supply zone. There's a supply zone. Yeah, I can spot here. Wait for market to get to this supply zone. So now wait for market to get to that supply zone, this supply zone before you said that's how trading is. So you wait for your entry confluence. You don't just buy randomly. So wait for market to get to this point and then sell. And there's two things involved here. You can also see multiple tops. So market can still use all this area as liquidity. But for the first time, if market tap on this, market will first of all do something like this. Market will do something like this. Market will tap on it to do something like this. Pull down, then pull down a bit before breaking, finally breaking or using all this as for liquidity. But market will first will give you that you want to first most of the time before it gives you what before finally this part as liquidity. That's just how it is. We've come to the end of this session. I believe you've learned something from this. Subscribe, like, drop a comment and which is your own opinion, and thank you for staying to the end. Yes, see you on the next one.